You're watching Benchmark. The September issue of LMD says that the uncertainty created by the US debt ceiling issue and its repercussions will reverberate across the globe. And the journal warns that if there is a serious adverse impact, it will affect other parts of the world. So what are the implications for Sri Lanka, if any? Benchmark's Anushan Selvaraja attempts to get some answers.
Welcome to the Voice of Business. On the show this week, I have LMD columnist and market analyst Hasita Premaratna. Now, how are the debt crises in the United States and Europe affecting us? You say in the forthcoming edition of LMD that, quote, the uncertainty created by the US debt ceiling issue and its repercussions will reverberate across the globe. If there is a serious adverse impact, it will affect other parts of the world, unquote. Can you elaborate on this, Hasita?
Yeah, I think in the current globalization happening, United States economy is one of the significantly important part of the whole globalization. So essentially, if something happens in the US, whatever happens in the US, there will be a repercussion elsewhere. I would say there are a few areas where we might have to look at. One of the areas would be that the US, obviously with their high budget deficits, will have a problem in granting loans or providing grants. Free or concessionary loans to developing world. Another thing that might come also into the effect is the US interest rates have gone up and would probably keep under pressure. Maybe not a lot, but somewhat increase can be seen in the LIBOR and the US Treasury rates, which will have an impact on the markets, the financial markets, the bond markets, and Sri Lankan government going into the commercial borrowings where the sovereign is now sort of looking at bonds on a continuous basis. The cost of borrowing for those future bonds might have a implication through that as we move on, unless things are resolved in a positive manner. A third area that we might have to look at is, of course, in a passage of uncertainty, any investor, global investor, would take a little bit of a wait-and-see approach, a slow approach. So in that wait-and-see approach, naturally, some of the investors who may look at Sri Lanka, who are looking at Sri Lanka, might also kind of slow down a little bit. And in that uncertain passage, there might be a bit of a slowdown in the inflows to the stock market as well as the foreign direct investments that come from the private investors.
Now, why is it that foreign interest in our stock market continues to be subdued despite all the post-war hype and image-building maneuvers that the powers that be insist are now par for the course? And how will the predicted economic downturn in the West have a bearing on the state of affairs?
Yeah, I think there are two sides to it. One side, in the short term, there can be somewhat a slowdown because people are kind of taking that wait-and-see approach and due to the uncertainty. But having said that, the kind of bad investment climate in the West means that people will look for opportunities to invest in this part of the world, particularly China and India. And with Sri Lanka also hanging on to the Indian subcontinent, will definitely have a positive kind of approach in the medium to long term, I would say, when they look at investment opportunities in growing economies. So short term it might be a little negative, but in the longer term definitely we can expect things to be more positive. But having said that, from a stock market point of view, the investors will come and invest provided that they see value and they get the stocks at the right price. Now, if the retail participation is going to just drive the prices of certain stocks in an unwarranted manner, sometimes you might see that foreign investors in particular, might look at alternatives to Sri Lanka. And in that context, places like Brazil, Russia, Indonesia, most of those markets are trading way below the price earnings ratios that are in Sri Lankan stocks. So in that context, they will have a choice to invest in the attractive markets and evaluation. So yeah, I think we will be an attractive destination from a growth perspective. But having said that, it has to be also be looked at in the context of what valuations they can enter into. So on the FDI side, if things move progressively in the GDP growth, etc., we should expect more foreign participation in the future.
As you noted, LMD, since we are borrowing in the commercial markets through sovereign bonds, the cost of issuing such bonds could rise in the future. What are the implications of this in the big picture scheme of macro affairs and related planning?
Yeah, I think the government has taken a view that there is a strong GDP growth that can be expected in the next few years on an ongoing basis, say 8% plus growth in the GDP. So to fund, to kind of sustain that kind of momentum, you need heavy infrastructure related investments in particular. So to come out with infrastructure related investments, you may need a bit of long term funds, 5, 10, 15-year type of funds. Some are coming through soft loans, some are coming through commercial loans from government to government type of arrangements, and another option they have evaluated is the sovereign bond market. Now they're getting it at a little high price at this stage with a BB type of a rating from a credit point of view. So they're looking at about a 6.5. The recent one went at 6.25. So I think those rates are somewhat high from a sovereign point of view when a government is borrowing. But having said that, under the circumstances of growth that we are projecting, I think it is important that the funds are there to build up the infrastructure without any disturbances due to lack of funds.
That was Hasita Premaratne talking to Anushan Selvaraja. Well, that's our show for today. Thank you for your company. We hope to see you again next week.